Good afternoon. Welcome to Midcap Radar. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's Friday, finally. Nifty, it came off from the highs, did see some recovery, and is managing to be around the 24,685 mark, very close to the 24,700 level. But yes, there is some underperformance which has come by. Midcap's absolutely flat, but we have a lot of stocks to discuss today.
That's right. Quite a lot lined up on the show. It's been a very choppy trading session.
Yes.
This particular Friday moves all around. And the broader end of the markets, you're actually seeing a little bit of underperformance. The advanced decline ratio there quite muted. But we have a lot lined up on the show. Some important corporate conversations lined up as well. So let's start off with the top headlines. Stocks trade ranged on Dalal Street. Auto and financial services stocks gain, while realty, FMCG and IT dragged. Mid-caps relatively outperform.
BSE shares surge over 4% in a volatile market on strong volumes after the company completes its first ever Thursday expiry yesterday with strong volumes.
Sri Digvijay Cement under pressure as the company's promoter plans to divest 50% stake. Stock declines over 4%.
Varun Beverages is under pressure as Centre raises GST on aerated, carbonated and caffeinated beverages to 40% from earlier 28% plus cess. Management tells CNBC-TV18 that they will pass on the GST rate cut benefits on 30% of their portfolio.
Realty stocks slip in trade with shares of Prestige, Godrej Properties and Oberoi Realty down up to 3 to 4%. The Realty Index falls 2% in trade.
All right, those are the top headlines that we are tracking. We'll talk about individual names in just a bit, but in the broader markets, the advanced decline ratio is in favor of declines. But we do have some big moves in some of the stocks that we don't talk about so often. We have Moschip, which is up around 7% in trade as we speak. We do also have the one MobiKwik stock that has been doing well for a while now and is up another 5.5% today. We have MIC Electronics. That stock is up around 18% as we speak. There's NetWeb as well, which is up around 8.5%. So a lot of these names, which we don't talk about so often, are seeing big moves, and especially in a market like this right now, where the advanced decline ratio is in favor of the declines as we speak. The mid-cap index did see some recovery from the lows, but it's largely flat with some positive bias. But this is our special segment, Mid-Cap Movers. We have Vivek to take us to the mid-caps that are moving around in trade today. Vivek.
Well, that's right. Like you just saw on the screen, a very crisscross line, a very volatile trading session, very choppy moves, and volumes overall are a little dry. Which are the stocks that are moving around in the session? First set of stocks that we look at is the auto pack. The large cap auto names doing quite well, but look at Ashok Leyland today. After a while, this particular stock up over 2.5%. GMDC, this particular stock, after continuous sessions of outperformance today, has seen a breakout, almost 12% higher, top gain on NSE 500. Again, positive momentum seen from hopes of the rare earth mineral performance. BSE yesterday was the first day where you actually saw the Thursday expiry as far as F&O was concerned. Very good volume seen in yesterday's trading session. That stock seeing recovery from the recent underperformance. The other set of stocks doing quite well. Have a look at SKF India. After a while, this stock up almost 6%. RBL Bank almost higher by 3%, despite the stock being in the F&O band. And Sirma has cooled off a little bit from the day's high, but up 1% nevertheless. On the other hand, realty stocks continue to remain quite muted in the session. Persistent Systems, Emphasis, a couple of names from the mid-cap IT space under significant pressure. Sri Digvijay, we told you about the promoter PE investor exiting this particular name, down 4%. And Varun Beverages, not as beneficial or not as big a beneficiary from GST rate cuts as other FMCG names. This stock down for the second straight session today, one of the top laggards even in the F&O space.
Okay, all right. So those are some big mid-cap losers that we are tracking, but it's a good time to get a technical check on the markets. Let's welcome Hemin Kapadia from DR Choksi Finserv for just that. Hemin, good afternoon. Thank you so much for joining in. A very choppy trade today. Do you think we'll see some action in the last 1 hour of trade?
Very good afternoon, Sonal. Thank you for having me. It's always a pleasure. We've been down for some 14 hours, Sonal. So a small bounce is around the corner. And frankly speaking, the VIX is sub 11. So I don't think there's going to be a big down move or anything spectacular happening on a VIX, which is sub 11. So stock specific, if you look at the Bank Nifty, Sonal, we've gone nowhere. We spent days over here doing nothing in particular. Nifty is slightly different though. Bank Nifty looks weaker. Pockets like I think Vivek also mentioned, I think Metals are looking good. Auto as a sector has done well, but yeah, it's all over the place, and it's more stock specific than anything.
Good afternoon, Heyman. Any individual stocks that you like at this point of time? Metals, couple of days did move higher. Anything from that particular space or anything from broader markets that you like?
Oh, Tata Steel moved fast. I think Hindustan Copper looks very interesting, and now since it's out of FNO, I think the volatility would cool off. But yeah, if I were to give you a couple of stock picks, firstly, I would have a buy call on Indus Towers, Vivek. Deeply oversold, has come off from 430 to 315. Indicators giving crossover buys after reflecting positive divergence. Volume spike, highest volume in maybe last 25 trading sessions at the low. Those levels have been protected. So everything seems to suggest we are setting the stage for a recovery as far as Indus Towers is concerned. So a buy at around 330. It's gone up a bit, but at 330, stop loss 318, target 354. And the other stock, Vivek, there's a sell call on delivery. It's formed a rounding top. There's crossover sales, there's negative divergence. Everything seems to suggest we are slipping into a corrective phase. We've had a beautiful run from 240 to, let's say, 490 almost. So now we are slipping into a correction. It will get slightly more acute below 460, but yeah, one can sell delivery at 465, stop loss 477, target 441. Vivek.
All right. Thank you so much, Amin, for joining us. Those are some technical picks coming in. With that, we'll slip into a break. When we come back next, management of JK Tyre Industries will join in to discuss the impact of the big GST rationalization. Welcome back. You're still tuned in to Midcap Radar. Let's get a corporate conversation now. Raghupati Singhania, who's the chairman and managing director at JK Tyre Industries, is joining us now. The top three talking points, of course, during the conversation will be the price revision due to GST reduction that continues to remain the big story, rubber pricing trend, and outlook on Mexico business as well amidst the tariff tensions. Mr. Singhania, good afternoon. Thank you so much for joining in. Well, I have to start by talking about the big GST cut on tires being supplied to tractors. It's a 5% duty. On the other tires, it's around 18% from 28%. What is the impact that you will see? Will you pass on these price cuts that have come by to consumers as well?
First and foremost, I think is a very welcome step at this right juncture. And it will certainly boost the Indian economy, particularly which is consumption-led. As far as our specific business is concerned, I think it will certainly give a boost to the tire business across the board. In the tractors, we do see some demand pickup because of the cut in excise duty, and the GST, I mean. And also in the overall bigger business, the cutting of GST on trucking, for instance, is going to make a huge change in the country. If you look at it this way, the goods and vehicle movement is the basic delivery mode. That is for consumer goods or whether it's for industrial goods like steel or cement or even food grains. So it is going to reduce the cost of transportation. And trucks are the backbone of industrial movement in the country. So the supply chain is completely driven 65% to 70% in India by road transport. And even any GST reduction on the upfront will reduce the capital cost of the trucks, which will, again, according to me, create some demand boost for the trucks. And so therefore it will revive the auto industry as well. To that
right. Right. Mr. Singhania, at the end of Q1, you said that you expect the tyre industry to grow at 7 to 8% in FY26, and you also upheld your double-digit consolidated revenue growth guidance. Post the GST cuts that have come about, both number one for the auto sector and number two even for the tyre sector, where do you see growth as far as FY26 is concerned?
I would say growth will be more or less as you just mentioned, maybe a couple of points higher. Because look, the equilibrium is not disturbed. The demand-supply equilibrium is not basically disturbed. It is not a price-sensitive product. So this is a consumption need product, and therefore it will not increase the demand superficially, but marginally, yes. And to that extent, the prediction for the demand growth will go up a few percentage points. That's what.
Okay.
Yeah.
So it's demand inelastic for tyres in general, and that's why a cut will, of course, improve sentiment, but you don't see that growth will increase so much because the equilibrium is already at balanced levels. Mr. Singhania, this is one part of business, GST cuts that have come by. I just wanted to understand whether there'll be any price cuts that we'll see in products from here on. How do you go about passing on the benefit to the consumers, and how have rubber prices trended so far? How do we align the supply chain altogether?
You see, it's a very simple, because the prices, there's nothing like price cut. It is, let us say my price was 100 rupees and I was charging 28% on top of it and billing the customer. Tomorrow onwards, I will do 100 rupees and add 18% and bill the customer. So to this extent, you may say the cost of acquisition for the customer comes down. There's not really a price cut per se.
Actually, when you say price cuts, I think consumers just become happy. So if you put it that way, it just helps selling the product as well, is why I asked you that particular question. But on the raw material side, how are rubber prices trending currently?
Rubber prices are at the moment reasonable, and they're not very high. Of course, this is a season, as you know, off-season with a rainy season. But the rubber prices are more or less stable at the moment, and we don't see an extraordinary hike on the front. And even other raw materials are behaving generally all right.
So, Mr. Singhania, sequentially, can we expect better EBITDA margins Q2 versus Q1? So, the second part of the question is, GST rate cuts, clearly you benefit. What we also want to understand is that when it comes to JK Tornel in Mexico, there was a lot of overhang due to tariffs as far as USA, which was one of the customers was concerned. So, going forward, is there more clarity now?
Yes, indeed. I mean, for the time being, there's only a nominal tariff in the imports from Mexico into US. As a matter of fact, if I may digress slightly, all the tempomaniac which is going on, tariff war, and so that makes our Indian tires going into US a little more expensive because 50% tariff. So in fact, we have strategized to send in more tires from our Mexico plant to US, where the tariffs are very limited. So in fact, it is in a way we have strategized or re-strategized our whole game plan.
Okay, so how has it changed operations for you? Because, selling or sending stuff from Mexico versus other geographies would involve some cost or would involve some reorganization. If you can explain, has it become a little costlier to change or shift that production there or send cars from there? Do you have to add capacities? Because I'm assuming a lot of capacity was taken care of in other geographies.
A very good question indeed. There are two parts to it. One is organizing sales, the other is organizing production. As far as the sales is concerned, we were already, as a company, exporting to LATAM in a big way, Mexico and Europe, and apart from Africa and Middle East. So in fact, it's just a question of diverting, reallocating volumes. So that does not require a new setup of sales. As far as the production is concerned, we have reasonable capacities in Mexico. And that product, which we were selling to LATAM, we may divert to US to an extent and supply it to LATAM from India. So, that little bit of flexibility we have, luckily, because of 9 plant locations across the world.
Okay. Mr. Singhania, you had also alluded to the fact that you are in talks with a couple of customers as far as the premium segment is concerned. Have you managed to close any new customer acquisitions in Q2?
Well, this is an ongoing process. So number of customers are going on in discussions, and they're evaluating the products, and they're visiting our R&D facilities and so on and so forth. But specifically to mention that if we've closed a particular customer in Q2, I can't pinpoint any particular one at the moment.
All right, Mr. Singhania, we take that point. Thank you so much for joining in today and patiently answering all those questions. That's the word coming in from JK Tyre. They'll pass on the GST cut benefits to their consumers. Demand will also see some improvement. Most importantly, transportation costs will see a cut because of the GST rejig. The stock at the day's high, and yes, there is a recovery in the Nifty as well. So let's quickly take a look at that. It's 10 points higher right now. When we started the show, it was down around 50 to 60 points. So we are above the 24,700 mark, and it is led by banking names. So just take a look at the bank Nifty as well. We do have some gains coming in there. There's IndusInd Bank. We have Kotak Mahindra Bank. Reliance Industries also is seeing some recovery. HDFC Bank is the other one, which is aiding the recovery that we are seeing from the lows of the day. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll talk about individual stocks and a lot more.
Welcome back to Midcap Radar. Well, there has been a sharp recovery as far as telecom names are concerned, especially Industar. Rima joins in with more details on what's transpired over here.
Thanks so much for that. So the promoter of Industars, that's Bharti Airtel, which has about a 50% stake in Industars, via the open market towards the end of August, has purchased some shares, about 68 to 69 lakh share rupees, and that translates into about 0.25% of a stake hike. So that is the positive. So this has been done via the open market. So you generally know that whenever the promoters hike stake in the company, it infuses confidence. And plus, Industars has also been beaten down. The all-time high on Industars was 499. The stock today is about 32% off from its all-time high levels at about 338. So the stock has fallen, and now the promoters have come in and, added to about 0.25% to their overall tally. Plus, if you just go by the recent notes which came out on, on Industars this week, one of them was Citi, and they said the bear case in the case of Industars is 300 rupees. The stock is not very far away. So their point is the downside from here is limited. So Citi had a target price of 460. CLSA's target price was 520. Today, Ambit also came out with their note. And, this whole thing about their entry into Africa, which raised a lot of concerns, they're saying those risks are overblown. So which is why it's their top pick in the entire telecom basket. They've put a target price at 525. So that's about Industars today. The two triggers that the street watches: one, reinstatement of dividend because they'd stopped giving out dividend. And the second one is any relief for Vodafone Idea. Back to you.
Okay, all right. Thank you so much for joining us with all those details. Rima explains the move that we are seeing on Indus Towers. But let's move on. Swiggy Instamart CEO Amitesh Jha tells Shireen Bhan that festival demand is expected to be multiple times bigger than 2024. Also, as the GST cut will drive consumption substantially. Listen in to that exclusive conversation.
Just in terms of the execution challenges that you foresee as you amplify and ramp up growth from here on, where do you feel the most comfortable today and where do you feel some discomfort in terms of being able to deliver?
I think the one thing that I'm very comfortable is with the team. The team that we have built inside Instamart is a phenomenal team that is ensuring that day in, day out, everyone has the same ambition, same goal, same focus. And that is the reason why we have seen a lot of things that you would be seeing in the last 5 years, essentially, as well. The big discomfort that I always have is is going to be a big festive season.
Yeah.
I believe this festive season is the season. Last year, it was extremely big. Okay, and we thought, we don't know how much it will be after that. The curtain raiser for the festive season, which was Rakhi and Ganesh Chaturthi, we have already seen the glimpse that is going to be one of the biggest, festive season for.
And add to that the possibility of GST cuts. How are you working your way towards that?
Yeah,
because that's expected to give a big consumption boost as well.
We believe a favorable, GST cut will drive the consumption substantially. Festive season is the right time as well. We are well prepared for what we expect. We are absolutely not prepared for what we don't expect. So what is keeping myself very, very paranoid right now?
Are you factoring in the possibility of the cuts coming in and that could perhaps lead to higher?
We have tried, but again, as I said, 3.5x in Rakhi was not expected. Okay, so we don't know. I mean, what is going to? So I'm really, really bothered about our inability to serve the consumer when they really come in hordes.
But you're saying you're getting indications that this is likely to be bigger than last year for sure.
Bigger than last year. It's like going to be multiple times of last year.
Multiple times of last year.
The question is, how much are we able to essentially cater to it?
Okay, well, that's good to hear, and that would certainly be music to the government's ears as well, that we're seeing this big consumption boost.
All right, on that note, we'll take your leave on this edition of Mid Cap Radar. Have a great weekend ahead. Your stocks when we return.